companies. So today in this session, we're going to look into what is it that draws investors to startups. And we have with us two very special guests. The first guest is a founder who has raised investment even recently, just a few months ago. He's Tarun Chhabra, founder of India's first sustainable footwear brand, Neiman's Shoes. Now he's going to share some of his key learnings of his journey today with us. And the next is a very famous investor in Hyderabad and South India, managing director and CEO of 50K Ventures, Mr. Sanjay, who can help you understand the process and mentor you to reach your goals in your startup journey. Many a times, entrepreneurs are not very clear about what are the first steps to be taken, and hence we have difficulty in getting our priorities right. So this session will definitely address that for all of you. And Sanjay's consulting hours are very precious. Academy 10X has got like 1 hour of his tight schedule to address this issue. Thank you very much, both of you. And extremely happy to have both of your time today. Along with them, we also have Mr. Balachandar, founder of Wassup, and also the curator for this event to take the session forward. Over to you, Bala.
Yeah, thank you, Tanzila. Thank you. And extremely happy to have Tarun Chhabra and Sanjay. Tarun, welcome to this platform. Thanks a lot for agreeing to join. And, I was just reading through your profile when Sanjay recommended, and it sounds so exciting. The journey from US to starting something very niche in a footwear segment in India is something not everybody goes through. I think you've gone through that journey, and you've taken a category which is very day-to-day category, and given a total new spin to it with the whole angle that we've gotten. I don't want to take away your thunder. I want you to reveal it to the audience as well. And not having just started up the brand, you've also gone ahead to do it in a very modern way. It's completely online, and you've made it an investable vehicle, and multiple angel and seed stage investors have got involved and interested in it. So the whole idea today is for young entrepreneurs to probably get inspired from you and listen from you on your journey, how you started the brand, and how what it took to kind of get people interested to invest and move ahead with the brand. And of course, a bit about your personal journey as well, from being in the US, coming back to India, and finding your calling in starting the footwear brand as well. So without much ado, I'll first call, I will, before I bring on Tarun, I'll also like to thank Sanjay. Hey, Sanjay, thanks for joining and making this happen. So we'll look forward to your session as well on more of the investors' perspective on what investors want. But we'll start with Tarun's session on his journey and his brand. Over to you, Tarun.
Sure. Thank you so much, Bala. Appreciate you guys having me here. Thanks, Sanjay. Thanks, Tanzila, and thanks, Bala. Right, so to introduce myself, I graduated in the year 2005. I started working in the IT sector, worked for the third largest software company back then called Satyam. Right, worked there for about 2 years. Wasn't thrilled with the kind of work that I was doing. Right, as a fresh graduate, I was put into night shift as a software developer, raising tickets for a US client. Wasn't giving me goosebumps. So I quit that. I went abroad, did my master's in computer science, and worked there for about 10 or 11 years, right? I've stayed in different parts of America, worked with several Fortune 500, retail and pharma companies. And my core background is data, business strategy, helping businesses grow and go deep dive and take a different trajectory from what they were doing earlier. So for me, Neiman's, happened out of my own personal struggle, right? So 4 years ago, if anybody would have asked me, right, that I'm going to be starting a footwear brand, I wouldn't have imagined that in my wildest of dreams, right? So the idea for Neiman's sprung about out of a travel frustration, right? So in the last 10 years, maybe I would have owned over 400 pairs of shoes, and owning, these many number of shoes was not out of my brand fascination or, just to keep acquiring brands. It was purely out of a frustration that I had, right? I was never able to find a more comfortable pair of product, right? And my lifestyle is I get up at 6 in the morning, I go out for a jog. Then my work starts at 8 in the morning and gets done about 5:36. And then again, I have, meetups with friends, casual sessions with my colleagues, and this involved. So these three activities involve three different pairs of shoes, right? Now, if you look at a running shoe, a running shoe is so bulky that you wouldn't want to wear it at work. And your work shoe, which is made out of leather, is so uncomfortable that it's unrestrictive, right? And you just wouldn't want to wear it when you come home. So these were some of trends that I'd observed, right? And I had done nothing about it. And back in 2016, when I was taking a trip to Spain with my family, right? This was when it finally struck me that I got to do something about it. And what happened back then was I was traveling with a pair of suitcase, which had 6 different pairs of shoes, right? I had a walking shoe, I had a running shoe, I had a work shoe, and I had a lounging shoe, right? So something in that trip kind of, left me deep down wondering that I'm complaining so much and doing nothing about it. So I started talking to a lot of people back in India, started talking to a lot of people abroad, and started doing research on what's the per capita shoe buying, right? How many pairs does a person own in a year? And based on the data that I was getting from America, Europe and in India, right? The answer was pretty clear that people were buying multiple pairs of shoes. And then I started doing deep dive on, what is the reason that people buy more than one product? Right? More than one shoe for that matter. And the answer that I kept getting was pretty synonymous with my struggle, right? Though the positioning was different, the way it was articulated was different, but everybody kept saying that, hey, I just need a comfortable pair of product, right? I don't feel that this is comfortable enough, so I go buy one more pair, right? So I saw a definite opportunity, right? I said, okay, this is just not my struggle. This is a struggle of, several thousands and lakhs of people out there. And I started doing more research on which are the brands that target this sector, right? And found very few brands targeting and taking up this opportunity in positioning themselves as, a comfortable pair of shoes. Like the Nikes of the world, the Adidas of the world are all pure functional based shoes, right? They're great for running, they're great for workout, but they're not great in the lifestyle category. So I said, there could be a market here. And that's when I started doing more deep dive research. I reached out to my, elder brother, who's my co-founder, and pitched him the idea. I wanted him to stop doing what he's doing and get involved with me because of the kind of background that he had, right? I was able to convince him after several pushy meetings, and I got him involved into the business. And that's then what we decided was we're not going to hire a bunch of consultants and let them dictate how shoes are being made. And I'd understood a lot about the footwear sector from a consumer point of view, but I did not understand it from a founder point of view, or from the manufacturing point of view, or from a design point of view. So I took some time out and, I said, we need to learn this industry from ground up. Until and unless we figure out how shoes are being made, we're not going to get into this sector. So back when I was in the US, I was a high profile consultant working during the day and, had some flexibility at work. So I took this as an opportunity and I started traveling around the world. So I went to several parts in Asia, right from China, Hong Kong, South Korea, India, Turkey. I went to Europe and America and started learning about the footwear space deep down. And that's why I'd learned manufacturing, design, sourcing, and I'd understood everything from a technical point of view. And what I'd understood was everything that goes in the footwear space today is made with chemicals. It's made with all synthetic fibers, which are chemically loaded. They're not great for the environment. They're not great for the skin. So these are the times when we value way more on what we eat, right? Where is it sourced from? What nutrition does it have? So I said, if we are making footwear, right, we've got to make it with the best of natural and recyclable materials. So what I mean by natural is any material that exists within nature is something that we wanted to use. Any recyclable material which has already lost its life, we would bring it back. So we spent about 3 years, right, about 2.5 years to be precise, in creating the entire supply chain, in identifying the best of materials. And we brought Neiman's into the market in December 2018. Right, so Neiman's today currently is primarily a direct-to-consumer brand. So what I mean by that is we sell directly to our consumers out there. We don't have any middlemen, right? That's how we bring the best possible products at best possible prices to consumers. And the idea and the focus is to create an absolutely comfortable pair of shoes for all day wear. And in the process of using natural fibers, we have introduced features that traditionally never existed in footwear. For example, Neiman's is India's first sock-free shoes. You don't have to wear sock. They don't smell. They are odor-free. They are temperature regulating. They are trans-seasonal. So depending on your body temperature and outside temperature, they adjust according to it. And if it's summer, they behave opposite. They'll keep you cool in summer. In extreme winter seasons, they'll keep you warm. Plus, they are machine washable, right? And so we launched primarily via our website, say about 16 months ago. And we recently raised capital from serial investors, say about 3 months ago, after we created a so-called, product market fit. We established a co-marketing team, and the product scale was there, and we raised capital for growth, right? And now as we started growing, we've started taking a more omni-channel approach, and we've started selling our products via various marketplaces like Amazon, Myntra, Tata Click, and so on. So that's a little about Neiman's, about me, and what I've done thus far.
Thanks for that quick run through of your journey, and very beautifully put together. And what you've done is, not only have you brought an innovation in a category that's been like very, let's say, done and dusted with, but also you kind of created a new category, subcategory in that, which is like, all-purpose wear shoes, and stuff like, as you said, socks-less shoes and stuff like that. So always, when someone takes a path that is less trodden, it's more difficult. So were you finding it difficult to find acceptability among consumers? How do you convey the innovation or the unique positioning that your product has?
See, I wouldn't say it's been a difficult road to convince consumers, right? Because right up front, I knew that the product is different, and the uniqueness is going to be on the storytelling, on the product positioning, right? So since before getting this product to market, we always knew that we've got to rely on our storytelling abilities, our content pushing capabilities, and be able to drive the fact on how our product is different, how our product is better, right? You use unique content positioning techniques, for people to accept the product, for people to try the product, and then for them to be the judge on is the product better or not, right? So we latched on to platforms like Twitter, right, which had early adopters, right, which have startup founders, which have people who are more mature, people who would try such products and then give it a go. So we started searching for those early adopters across the country, and started positioning on how we should convince them. We were so confident about the product that we had a no questions asked refund policy right from the very first day, saying if you don't like our product, you use it how many ever days and we'll take it back. Right, a lot of people were anticipating that there's going to be an abuse in a country like India, but we haven't seen any abuse ever since. If the product is good, then people are sure going to appreciate the amount of effort that's put into it, right? So yeah, from a consumer point of view, I think the acceptance has been great, right? There has been some odd questions about the pricing that's come in, but yes, it's a journey, right? We are a startup, and as and when we scale, the prices will be able to come down.
Sure. Taran, also, you did mention briefly about the journey. You are from a shoe or an accessories or a fashion background. You were a, business analyst, working with larger corporations. So how was it when you picked that, yes, I want to do shoes, of course I've read about Neiman's, and you got the shoes done with Australian wool by British designers, European designers, and stuff like that. So how was it putting the whole product together? It took you far across the world to find the right pair of right product to put it together. How was the journey? Because many people don't have a background in some things that they want to set out to do. How was the whole process, and what would you tell people who are getting into uncharted territories as far as product is concerned?
See, there's this two sides of the coin, right? One way to look at it is, you'll be advised by people to always start something you're an expert in, right? Because you would have gained knowledge, you would have, learned over the years. But what I look at is, and what I discuss with my co-founder is, our biggest advantage is that we were outsiders in this industry. Right. So we looked at it from an outsider point of view. We looked at it from a consumer point of view. We did not look at it from a manufacturing point of view. We did not look at it from, from a point of view saying how scalable this could become, right? That was not the first question we asked. The first question that we asked is, how can we create a comfortable product? And post we started answering those questions, right? Then we started looking at, how do we sell this, right? How do we scale this? How big can this become, right? And then how should we market this product? So all of it, kind of fell in place once we started, looking into an uncharted territory, right? Great things happen when you move out of your comfort zones, right? And I'm a big believer in that. Right now, when I started looking into this, I had several mentors up in Silicon Valley, and they're brutally
Hello?
Looks like there's a connection lost.
Oh, there's a connection loss, I think. So I was
Maybe someone
thinking
can just call him.
my signal is a problem, or it was.
Okay.
We'll
Maybe you can just call him and check out.
Yeah, Tanzila, just if you can just call him and ask him to log on back.
Yeah, okay.
So Sanjay, very interesting story, right? I mean, new space, definitely a very unique product, and he's pulled it off, and is slowly gaining scale. So very interesting, actually.
Absolutely. So one of the reason I introduced Taran today for this webinar is I was following him since more than a year. We were in touch before, immediately after he launched this product in the initial days, and even before he raising the money and all, because we don't look at consumer products. We didn't express much interest, but otherwise as a founder, there's something to learn from him. So as he already described, I think Taran is back. Maybe I'll talk a little more about our interaction once he's done.
Sure, Taran. Taran, please go ahead. Sorry, we lost you in between, and me and Sanjay were just having a small chat about
yeah,
you.
I'm extremely sorry. So I got disconnected.
No problem, Taran.
So I think, So what I was saying is, during this journey, right, there's been a lot of questions put out on how, a person who comes from a technical background, who's been away from India for so long, plus who has no experience in starting a footwear brand. And the biggest challenge in Indian ecosystem is there's been no footwear brand that has ever come up and done something out of the ordinary, right? I've asked people, which is the Indian footwear brand that you love, and there's absolutely no answer that anybody could give, right? The only footwear brand that we think is Indian is Bata, but Bata is not an Indian brand. So there's been absolutely no, there's no journey, there's no footpath there's no path that's proven, that's been taken by a brand in the past within the footwear sector, especially in an industry which is 70% unorganized, right? Which is led by wholesalers, distributors across the country. So it was a difficult part to get into, right? There were a lot of unanswered questions, but we we chose to answer them one by one during the course of the whole journey.
Sure. And Tarun, how has been the traction? It's about a year plus now since you've started up. You're already selling across India and maybe across the world online. How has been the traction, and what's your learning from this early traction?
So we've been growing 20% month over month, right? And that growth has been pretty consistent, something that I'm, absolutely thrilled about, right? And we, in spite of having lesser designs, which has been my focus area, right? Our focus area has been not to crowd the market or not to confuse a customer with too many choices, right? In spite of less choices, we do 25% reorder rate from our existing customers, which is phenomenal in a footwear sector in just 16 months of a launch, right? So far, I would say I'm thrilled with, the kind of, steps that we have taken. And now we are diversifying. We are focusing more on product development. We are focusing more on evolving our product and diversifying our supply chain and bringing out a few more products in later part of the year.
Great. So Tarun, it brings me to an important question, very relevant today. Like, how has been your fundraise journey as an entrepreneur starting off from scratch? And you have raised a successful angel round from reputable investors. So when you started off, how was it? What help did you get? What is the process that you go through? If you can tell us a bit about that, please.
Sure. So, Bala, I'd been away from India for way so long, right? So I was away for India for about 13, 14 years, right? And all my connects, all my friends, all were abroad. So the difficulty that I had was, how do I make the connection, right? How do I reach out to people, right? Though I'd known a lot about investments, I'd known about how things work out, but, cold emails, right, do take their own sweet time, right? So I'd spoken, but I knew I did what I had to, right? So I've done right from cold messages to LinkedIn messages to scout people to get a WhatsApp connection, an email connection, any way possible, right? And right when we were building our product or launching, I'd quickly made, understood that it's going to be a difficult route. One, because this has never been done before. Second, investors always look for mass scalable products. And because we were in a niche, right? We were premium, we are premium, right? So everybody was willing to chat with us. People were willing to spend time with us. But again, all of them wanted to see how we scale, right? Yeah. So there was no doubt in the product, right? They had looked at our product before launch. And after a few meetings, I quickly understood that I don't want to spend more time in capital raising because that would derail us from what we are doing. So we said, we'll go back, right? We'll bootstrap, right? We know we have a great product. We have a great team. Let's build this thing up, the old fashioned way, right? And start off with social media marketing, get to a certain proof point, right? And as they say, the proof is in the pudding, right? So as and when we got into a decent scale, we started those connections back up because now we were not reaching out people with prototypes. We were not reaching out people with pure decks. We were reaching out people with 6 or 8 months of, product selling, sustainable revenue, right? And we had a growth plan, right? And during this time, we had identified who we wanted to work with, right? I know in the next 3-4 years, what scale I want to get to. I know how much capital do I need to get to that scale. And I knew, who could be the people who could help me in this journey. So basis on that is when we raised our first round of capital.
Awesome. And did you, engage any banker, consultant, advisor? How did you, do it? Did you just do it by learning yourself? Was there any structure to the?
It was primarily learning ourselves, right? I'd met a lot of people over the course, right? I have, in fact, for meeting investors, gone on, taken flights just for a 15-minute meeting, sat whole day in coffee days and, wanted just to get some time out. So I've done all of that to grab attention. Right, so it's been all the structuring has primarily done by us. So we've understood what we wanted, right, and the passion was there, and it was very well accepted by our investors, right? Our investors are some leading founders across the country, people who have built great brands in the past and have backed great brands, right? So it's still for us to go ahead and build it, but their network helps, right? Because in the end, it's all about network, right? Who I can talk to if I have a question, is extremely important.
Absolutely. Awesome. So at this point, I'll ask Sanjay to also join this chat. Sanjay, you can switch on your audio and video, please. So Sanjay, you told me that you are extremely impressed as a founder and a product, and although you are not looking at consumer category, you felt that Taran and Neyman stood out as a startup, right? So what did you like in the founder and in the business idea that it made you look at them seriously?
Sure. So as I said, I had before the fundraise, and in the initial days, we did meet. We had a couple of long meetings. I tried to understand. I did exactly how I spend time with any other founder. And as I said, like, we are not looking at a consumer space, and I couldn't help him through 50K. But three things where maybe others should learn from what Taran did, and something very important. One is that clarity of thought. He's very clear about his product, what the value proposition is bringing. He's pretty confident. Whatever he talks about the product, the market, the opportunity, and his growth plans, it definitely gives an understanding that he knows about the industry. He went really, really very depth. Move on. Second thing, as I said, he just mentioned that fundraising would take really sweet time. If you would have gone behind every investor, he would have not shown the growth, what he has shown. So he just told that. And if you see today, Neiman's as a brand, when you go to any social media or any person, at least it strikes, they collect because of the uniqueness of the shoe colors or what he's trying to project, and overall the brand strategy or the go-to-market strategy, what he adopted, has created some kind of brand recall for a lot of people. And that's what he focused, and which will help tomorrow when he goes or he comes to any other new investor, he will definitely connect, hey, I know this brand, I've seen this somewhere. I think that's maybe intentional and unintentionally, but it works well. Maybe Taran, you should tell what was the intention, or it was just for something else, but I think it will work very well because people...
It was intentional, right? So it's a very funny story. So 6 months ago, when we were not, we hadn't raised, I'd been in a party where every investor across the country had come in, right? All the top guns, the Sequoia, Nexus. I'll tell you, 5 out of these 7 investors were wearing Neiman's shoes when they'd walked into that party, right? Wow. But none of them was ready to give me a check. So, right. So that's what helped, right? And you'll be a bang on in terms of a strategy. You talk to any footwear aspirant across the country, right? You would have seen our ads, right? So that was the whole idea, to come in with a big bang, right? And today or in the next few months, right? People, footwear is it's still not an FMCG, right? You're not going to think about buying shoes every other week, but you'll keep it in your mind when you are in the market to buy one, right? So that was the whole goal, to use content marketing the way we've done.
Absolutely, and I think thanks a lot, Taran, and for joining us and giving this run through of your brand and how your journey has been in a short while. Definitely, I think we would like to see the brand grow and as you said, potentially go omni-channel and move beyond just Indian shores. So all the best to you for taking this brand worldwide, and we'll of course continue to be in touch, and we'll take it forward. Now I'll hand over the session to Sanjay for the core session for this evening, where Sanjay will talk about what it is that investors look for when they invest in a brand. And coming from Sanjay's background of being in angel investing and early stage investing for about 8 to 10 years. Early stage is when it's very difficult to spot good ideas, good entrepreneurs, because once you are at a growth stage, you all obviously know that you've done something well, right? So I think the riskier part is the early stage. So if you can get early stage sorted out, then I think most of the other stages, it's rather not as complex. So the early stage also, so because the growth stages involve a lot of science and arithmetic, but early stage is a mix of gut and a bit of science. So Sanjay, now over to you. We'd like to hear from you on what actually means for what actually makes investors invest in founders.
Yeah, sure. Well, I'm just sharing my screen so that I want to run through a few questions.
It's more like inspired from what women want. This what investors want.
Yeah, it's one common question, right? So a lot of early stage startups or raising, they need to understand the mindset of an investor. See, every investor all has an eye for a startup, and they definitely have certain expectations. What is going to look in a startup, and whether is he satisfying the answers. So it's all about filtering, right? Today, as in every investor gets some hundreds of applications, startups apply right from the early stage to growth stage. Everyone seeking their attention, money, and every startup wants to market, sell their own startup, and try to impress as best as possible in terms of showing the best projections, financials, and everything, which is good. But again, it's all the reality, right? It comes and boils down to the reality. What investor really looks into a startup, and what kind of questions he'll be asking, and are you the startup is ready with those answers. Today, I would like to run through very brief sections and what kind of questions an investor will be checking. The initial, these are the fundamental questions, nothing more depth. There could be a follow-on based on this. Once a startup has a right convincing answer for this question, that's how they may get a follow-on meeting. So that's why I said what investors want in a startup even before considering to an investment, right? So very important today is like the vision, right? What is your vision? Today, so many startups come and they say, I'm trying to solve a problem. But a step before that, what is the vision for starting a company? Starting a company is not an easy thing, right? It takes a lot of efforts. You're trying to leave your comfort job or another opportunity, but you're trying to go to a route which is less taken, which is not comfortable, and moreover, it's not promising, because the failure rate in startups is much more higher. But still people want to come. For a few people, it's glamour. For a few people, it's an opportunity. And few others, it's an just let's try it. But few people really take it very serious because they have a vision. That's why we call it visionary founders. So entrepreneurs, the investors definitely want to look at the visionary founders. And the questions are like, what is your big vision of doing this? And you need to really be convincing. If you go and look at the vision statement of Larry Page of Google, it's very, very clear. You go and see Elon Musk's vision, it's very, very clear. As a beginner, and that vision didn't change because they talked about the thing the day one, and even now they talk that. It must slightly change. But do you have the same vision why you are doing this? And what problem are you trying to solve? Because every startup is born to bring up a solution for a respective problem. Is this problem today, again, it's slightly rephrased, is the problem you're trying to solve is a pressing problem? There could be a simple ordinary problem, there could be a pressing problem. So is the problem you're trying to work is a pressing problem? That's where you need to talk about that. And where do you want to be in the future? Because it's a long-term relationship for investors. It's not that you just invest money and it's a short-term thing. It's signing up for a long-term thing and getting into some relationship. That means you need to be really very clear about your vision, your problem statement, a solution for the problem statement, and where you want to be in the future. Today, one common answer a lot of people say is like, I may be the next unicorn or a sunicorn or a midcorn, they're calling it, right? They may not be a very convincing answers. Like you say unicorn, that's fine, but what is the plan towards that? And you need to be really very realistic about your every answer, what you're trying to say. This is all about the vision. You need to have the very clear answer to that. Then comes your market opportunity, because the space where you're operating, the kind of solution you have, how big is the market opportunity? If there's not big enough, you don't need investors. You can just run it, you can make money because it's small markets. You need money for the growth. That means like you need a growth capital so that the market opportunity is big and you want to take it to the next level. So you need to answer how big is this market opportunity. You'll only know once you dig a little more deep into that, understanding in terms of the numbers and stats, how big is this? And how fast is it growing? Today, certain markets grow year on year, right? So today, if you see the edutech, which was growing much more faster than expected because of the market scenario, what is happening. And you need to know what could be the growth phase of that and how established is the market. There are certain markets which collapse fast, which didn't last for long. So you need to say that having very statistical or methodological answer to this, like how established it is, how old it is, how many players did succeed in this, and where you're going to see. So you'll get an answer to this completely on a research base and validation with an existing stakeholders and other market leaders going, talking and understanding, and even the competitors. And then only you'll get the right answer for this market opportunity. Then comes the next question and defining the customer, right? Whatever we are doing is to solve the problem for a potential customer. And we need to understand who are your existing customers if you have any. If you're already validated, you need to define the persona of a customer. Is it an individual? Is it an enterprise? And who is your target customer? Again, who is the person going to respond? And when it's a target customer, the one who makes the decision and who actually pays to you. Again, you need to be a little more detailed that who is the person going to pay for your service. So this is what you need to have the answers. Next is your selling process. You have a problem, you have a solution, you know the market opportunity, you know what the product is. Now you need to talk about your selling process. How does the sales process look like? What is your approach towards the thing? If you see in Taran's case, it's very clear that he's going to have a D2C approach. So direct to consumers, that means he's not going to be on an Amazon, he's not having any other distribution channel. It's going to be an directly D2C. So what is your approach towards that? The next is, how will you reach your target customers? Again, what is the medium you're going to reach them out? Is it through an online medium, offline medium? What is that you need to put across? Third is, what is your sales marketing strategy? Or precisely, I'll say, what is your go-to-market strategy? Is your go-to-market strategy defined enough or planned enough that you're going to reach your target customers in the right way? So I'll give more examples to Niemens because I keep following them, and Taran did talk about that. Is marketing strategy is very clear to adopt digital. If you go to Insta, you go to Facebook and few other sources, and you have very impressive ads, and that definitely strikes the attention about any person that about your product. And next time the brand discussion happens, you'll definitely recall about that. And your customer segment, what age group, who are they? Are they the one who is going to be use your product? So this answers you need to have it in a very clear format. Then this is very important. I think I should have put this earlier, but it came later. The management team includes your founders, your team, and your advisors and everyone. Who is your management team? That means like your co-founding team. It's very, very important because when you ask investors, what is that key thing you look in investing in a company? The answer is teams. Team is something, it matters the most. Again, I'll say today, most of the companies in the market right now in this COVID times are in a very dicey situation because they are unable to pivot, pivot or change the entire the business model and all, which is very much needed. If the team has that kind of mindset, if the team is willing or prepared for kind of situations like this, they'll definitely try to pivot or change. And that is what required in a company, the team, the attributes for an investor definitely looks into that. And what gaps you have in the team and how do you plan to fill them? Today, most of the people who started may be a single founder or two co-founders. There could be a gap in terms of having another tech co-founder or a business guy or someone else. If you're having, or even a team, like sometimes I see most of the founders themselves do most of the activities. They are into sales, they're into product building, they're into marketing and other stuff, which is good in initial. After going to a stage, it's not advice. That's where you need to identify what more kind of resources you need and how are you trying to fill them or onboarding them, right? And third important thing is like, do you have a mentor advisor? It is very important. Even I think Taran has mentioned that he had some mentors in US and also he tried to speak to a lot of people. I know that he must have touched every investor, not just for investment, even with investment, asking certain things about opinion on the business. That's very important. When you find any expert or investor, anyone, see that can he be a potential mentor advisor for sake of, not for sake of having him to invest, but can he really help to solve certain of your challenges? Because most of you guys are doing this for the first time. You may have certain obstacles or you're not experienced certain challenges. To overcome that, you definitely need an experienced mentor advisor on board. You need to bring them. And even for investors, it also be helpful if you have a mentor advisor on board. That means you are not trying to make too many mistakes, because these mentor advisors will help you to overcome that. So if you don't have any, just try to find one. Then comes your revenue model. Again, your monetization strategy. What is your revenue model? It have to be very clear defined, because today, if you see, earlier there were companies, investors also looked at companies which had traction. That means you have more and more users but no revenues. But today it's a different thing, right? The simple example I give, like you have 100 users paying nothing versus 10 users paying something. Which is better? Always it's second is a better thing, because you have someone paying. You started seeing money because you have a validated revenue model. And what is required to be profitable? Because earlier it was revenue focused, today it's profitability focused. First, get profitable at a stage and then think of scaling up. That's how been changed, because people started burning more and more money thinking to scale and not becoming profitable. But today you need to prove that you can also become profitable. And that's where you say, I'm raising more capital so that I'll scale, grow, and then again become further profitable. So this is, again, you need to have a right answer for these questions. And coming to the fundraising plans. Why you really see, it's not necessary that you need to raise money. Again, I'll say, like, bootstrapping is very important. If you can bootstrap as long as you can, it's good, because you're not diluting much. You have a very clear validation metrics. You exactly know how much money you need for the growth. But don't try to run to an investor because you started a startup and you need to raise money. That's a mistake most of the people do, and they fail to attract an investor. The thing is, you bootstrap until you validate and have a right metrics, and you understand, I need this X money to grow. And you need to say why you are raising money and how will it benefit your startup. This answer have to be very clear. How much additional funding you anticipate to raise and at what stage? I know as you keep growing, there could be a multiple rounds of fundraising happening, and you need to say at what stage. So typically you say a seed, a pre-series A, and a series A. You need to know at what stage you're going to go for a pre-series A and what stage you're going to do a series A. These answers you need to have, and with very clear metrics. And how are you valuing your startup? This is all about the valuation, right? And there's something very important when you're raising the first round to the later stages. How are you valuing? And this valuation need to have a method. You just cannot say that my competitor rates is 10x of valuation, I'm going to raise. No, you need to have a very clear explanation on that. What method have you approached for this valuation? And you just cannot randomly say that I'm going to value it. But there's also a few answers to respond in an early stage or the first round of your valuing, that we can discuss a little later on. Evaluation subject is slightly vast, but to these answers, you need to be very precise about for every answer, what is the approach you have, keeping your startup and business model in mind. Competition, again, important. Don't say that I'm the only one doing it, there are no competitors. You are the only one, may be unique, but you're not the only one doing this. So it will be like you have not done your homework well. Today, it's extremely difficult to say that you are very unique in terms of no competitors. That's highly unlikely, because it's not possible that you are the only one doing. Even SpaceX has a competition. So you can't claim that he's the only one doing it. Right? Do your research well, that there are enough competitors. And today, competitors are direct and indirect. Not necessarily you may be directly doing it, but today indirectly. For example, like banks felt that there can't be any startups or competitors, but today there are so many startups who claim to be a banks. Today, neo-banking has opened up more opportunities. So which can again compete with banks sometimes. So like that, there's so many use cases. Like don't think that he's not my competitor. He may become your competitor soon. So who are your existing and likely competitors? Do you have an entry barrier? And if that, we have to be clearly, what is the entry barrier that others cannot enter it the way you enter. It could be the time, it could be the product, it could be some other uniqueness. And what is your differentiating factor? This is important. How different are you compared to your competitors, again, in terms of your value proposition or unique selling proposition or teams or what you need to define. This is something important you need to have the answers for. And finances, do you have your financial projections ready? In the sense like when you're planning, you need to plan your future. You need to anticipate your growth. So it's important to have your 3 to 5 years of projections. How much revenue you're going to make, how much burn you're going to anticipate, what is going to be your growth in terms of your financial inflow and other things. This need to be clearly defined. And what is your fund utilization plan? Don't randomly say I need $1 million. No, it have to be very clear precisely how much you're going to spend on resource, how much on infrastructure, how much on marketing, how much on other aspects. When you go more deep dive into that, you'll really know how much money you really need. You may think I'll raise $1 million, but you may actually need only 250K. So that only happens, you go a little more deep into your fund utilization plan. And this is important. Exit strategy, again, I mentioned it's for investors. We are not asking you to exit. We are saying, what is your exit strategy? Your exit strategy for investors. Someone is investing, definitely they expect some kind at some point an exit. They're not investing just because you're doing good and it's charity. We also expect some returns, right? You need to also give us an hope that what could be a possible exit. And again, most of the people give a wrong hope saying that IPO is not realistic. Keep that in mind. It may be realistic only when you reach such a milestone. If you think it's going to be really long-term stage. But if you're saying in the next 5 to 7 years or 3 to 5 years, if you have an exit, be more realistic. Today, the two more common exits investors can expect is like an follow-on funding. Like if you did a seed capital, a Series A, typically they may get an exit. For a Series A, Series B, C may get an exit. Second most common exits are acquisitions. Today, a lot of larger companies, if you see that recently White Hat Junior got acquired by Byju's, and all these investors got a very good exit. Those kind of exits are more realistic. See that who could be a possible companies may acquire at what stage, or which investors may come and invest you, and then they can get an exit. This will also give a confidence to investors whether, okay, if I invest in next 5 years, I may possibly get an exit. So these are the questions investors potentially may ask, and you need to really have the right answers for this. So this is what I would like to discuss.
Great, Sanjay. Thanks for taking us through. So, also from your personal experience at 50K, Sanjay, you've looked at close to probably hundreds of companies and have invested in 30 plus companies. Which are the can you talk to us about 3-4 rockstar companies of your portfolio which you identified very early, and they have gone on to justify your faith in them, a bit of take through with them, and what you really loved when you chose to make the decision?
Yes, Bala, definitely. Because in number of companies we invested, even it's not that every company is successful. We also have seen downside. We also seen some of our portfolios companies failing. But whatever bets we make, we also evaluate in the same way. I'll sometimes keep saying that the discussion between an investor and a startup is like discussion between two liars. And this guy keep talking, saying, and we also accept it. But one common thing is like the belief, the hope, trust in the teams and the product and the markets is something we look at. Definitely there are a lot of uncertainties happening, and we need to consider that. And when we're investing, the trust is like this team will make it happen, and this product has a potential and it has a growth. Keeping these things, I can say there are 4-5 companies, but I won't name them because my portfolio listens, again they'll think I'm biased. So I'll say that this one company, we invested in one of the early, we invested or $1 crore plus. This was not having any technology product. They were into very domestic services. But I very strongly believed in the founder and the market. They're trying to solve the problem of every household problem. So this is about, they're trying to solve the problem of maids. Today in India, if you see, almost every household has a maid. And if a maid doesn't come, it's going to be extremely difficult for the family to survive. They say like, if the maid doesn't come for a week, it's gone. Like everyone gets mad at home. And that's the area they're trying to solve the problem. And I could see a great potential in this because India is a market, majority of the middle class people also afford a maid. So that's where we believed, and a lot of people opposed, and they laughed saying that, hey, you're investing in a company which doesn't, it's a no-brainer kind of thing. But they haven't seen the future of it. Today, if you see, this is a highly profitable company and they're adopting technology to the next level. They already raised 2 rounds of funding from the big well-known names in the impact sector of VCs, and few other big brands are associated with them. And there's something, a belief in the future. It's a long-term thing, right? An investor always look in long-term. He doesn't look in the short-term and all. And that's what we have seen how it's going to happen. Even after 10 years, 20 years also, robots cannot replace mates. They cannot be a technology which can replace mates. They could be an alternative solutions, but still the human connect is very important. Today, there's elderly care, babysitters, domestic maids, and more different kinds of verticals these people address. And second thing, the founder, again, he had the clarity of thought. He knows how he's going to solve this problem, and he mastered the operations in the entire flow. And that gave me a confidence and convinced my investment committee that this is a company we need to really look into that. And believing that, we normally didn't want to do it in non-tech companies. This one exceptional, because tomorrow this company masters the operational process, and now the company is in the process to adopt a technology. Once adding technology to this strong operational process, you see how it can evolve. And that's what is going to happen now. In the next phase, next year, they're coming up with an Uber kind of model too. You can just book a maid in your vicinity by just engaging, like how you book a cab, you can book a maid for a replacement of an existing maid or fill the gap. So this kind of solution what happening. And second company is an SaaS company, because SaaS is something is going to, we already in the subscription economy, and today everyone at least have minimum 3 to 4 subscriptions they're paying. And I'll say like software was eating the world. Now SaaS is going to eat the software. That's where SaaS companies are also going to grow. And that also another what we see in the future. And we are invested in 2-3 SaaS companies, and both the 3 companies are doing good. And next year, we are also announcing a fund only dedicated to SaaS companies. Yeah.
Great, Sanjay. And at this point of time, I'd like to bring Taran into the Q&A as well. Taran, you can join in with the video, and thanks for staying back, Taran, through the session. So there's a question from Vikram. He asks us, how do startups choose the right investor who can align with the vision? So I'm sure Taran can take the question first, and then probably Sanjay can add in.
Sure. So there's several different things that we got to look at right now when we're raising capital, right? It's in it for both the parties, right? We are going to benefit from the investment, but the investor also looks for people who could, work for the capital that he's investing in. So, we as founders have to do a deep dive on, what benefit does the investor can bring along with the capital, right? There are several different forms of capital that are available. There's venture debt, right? There is banks that are providing loans. There's NBFCs which are providing capital. So capital is available from, several different sources out there across the world. So what we got to look at is, apart from the capital, right, what benefit are we going to get, right? What network does the investor possess, right? How is he going to help us in the next round, right? Does he have the capability to come in again in the next round and pull in certain capital? Because it's like Sanjay mentioned, right? It's a journey that a brand takes, right? Or a company takes. You just don't raise once to build your brand. You're going to raise maybe 2 times or 3 times, right? Depending on what you're building. So you've got to look at, what they've done in the past, right? Who they have backed, right? Maybe chat with some of those founders, try and find out how the experience has been, right? How the relationship has been, right? How could they help? And then take a calculated decision, right? If you feel that, they're the right people to go with, then go ahead and take the plunge.
Sanjay, your thoughts?
Yes, absolutely. What he said, to add it, it's very extremely important, especially your first-time investors have to be a value-based investor, not just someone coming with a capital. Because I've seen and confidently say that many startups who raise money with the people just who are bringing money onto the table, they suffer. There's no value to the company added, just the capital, they suffer. And I'm sure like you can check with anyone, they won't open up, but they are suffering. Because a person who doesn't understand the risks involved in a startup, number 1. Number 2 is like, it's a very long-term game. Number 3 is like, you need to trust, believe in the teams and the company. You cannot override, the investor cannot ride and give his own thing, because startup founders are the people who are running the business day to day. The investor, you cannot ask them, tell them what they need to do, because the founder knows better what his job, and he has more knowledge than the investor in the industry. Investor can come with a guidance strategy and share his experiences. That's why value-based investor is very important. You need to do a lot of the way the investor does due diligence on the company. Same way you do the background check on the investor, which companies invested. If required, talk to the portfolio company asking how did the investor add value? Did he help you? What did benefit you because of this guy? It's very important. Otherwise, this company will suffer in the midterm.
Sure. So Sanjay, coming to I think there are a lot of questions, and the idea is to keep this session very short. It's a 1 hour session. So we'll take a few questions, and then of course we have Sanjay also available for other one-on-one chat as well. So Shakti, if you can put up Sanjay's one-on-one advisory engagement, so people who want to have a one-on-one with Sanjay can actually book your slot with Sanjay, where you can also, you will have it on the chat box as well. Just click the URL and go ahead and give details about yourself. You can book a one-on-one session for an hour with Sanjay to understand where you stand in terms of as a business, how you can raise funds. So it'll be specifically you discussing with Sanjay on your business and your journey, right? So that's something that will be very useful for you guys, I think. As I leave you with this visual, but we will take one more question. Sanjay and Taran, I'd like to bring you in at this point on this topic of exits, right? Most of any investor, everybody knows by now is that everybody comes in to exit at a certain point of time. Of course, as you said, Sanjay, the final exit is at the IPO, but before that there are several exits. So how, as an entrepreneur, even if you're doing angel round funding, how do you plan for exits, and what would be the right mindset when you think about exits itself? How do you think of right exit? Because I have seen a lot of founders say that, I will start it up and exit in 3 years. The question is not exiting the founder exiting. The question is exiting the investors, right? So what's the perspective that, right mindset that you need to look into give successful exits for investors? Because I firmly believe that the success of founders is not in raising money, but in giving good exits. So can I have Sanjay's thoughts and Taran's thoughts on that, please? Sanjay, first to you.
Yeah, so as I said, like when investor is putting money, definitely is also looking at and return. The company is doing good, the markets are good, and team working hard towards the growth. At some point, the return is expected. And today, the startup investments is high risk, high return. If you lose, like you're going to lose the entire. If you make good enough. And that's one of the thing. The bets are on the companies and the founders. I'm sure even Taran in his pitch, he must have put one of the slide or talk to the investors. What could be the exit opportunity or strategy for the investors? So Taran, I think you should talk on that.
Right. It's a very debatable kind of question, right? Where do you see yourself, and how do you see yourself perhaps exiting out of the business, right? It's from a founder perspective, it's something that you've worked hard for several years. And again, when people ask you, how do you anticipate in selling that business, right? So for us, what we looking at is we purely looked at the value proposition, right? What we looked at was, how and where can we grow this business in the next 3 years, 4 years, and 5 years. And what did we need to get to those 5 years, right? So in all our pitches, what I've done is I've spoken about where we can get to in the next 3 years and where we can get to in the next 5 years. So within this 3-5 years, if I anticipate that, an acquisition or an exit could help our journey, is only when we will look at it, right? Otherwise, we've created a path that we want to hit in the next 5 years, and that's where we want to get to, right? And so that's purely been our exit strategy for now, right? It's not about and during this course, right, as we keep raising capital, if there are any early stage investors, who would exit or would want to exit, we'll be happy to give them an exit, right? So that's what we've planned thus far when we look at an exit strategy.
Yeah, to just add that, Bala, I could say quickly, we also seen few early exits in our portfolio. The most one was like acquisition, which another company took over it and gave an exit where investors got a decent return on the value what the company is acquired. The second was like a series A exit where VCs, next level VCs came and acquired at a much more premium valuation. What we invested, it went to multifold valuation, and then they give an exit. That's another way where again we made much more higher than the other things. Third is like a company getting in profitable and they buying back stake at an agreed value, which is other thing which is most commonly seen, especially these profitable companies. They want to buy back the stake, and I'm going to see this going to be more common practice will happen if the company is getting profitable. The founders have an option to buy back with the same investors and giving an exit, rather diluting further in the next round. This is what happening. So again, it also leads to the kind of investment they raise. If it's an equity, it's pretty standard thing. If it's in venture debt, it's slightly different ways of understanding on exit. And like that, it's all understanding between the investor and the startup before raising the money. What is the format and all, and that's how it applicable.
Sure. So I'll just take a couple of more quick questions, Sanjay. There's a question from Suneet who's asking about, so he wants to build a team for e-commerce business that he's looking to start up. And he asks, which is the better option, to go in for bank funding or for investors? So I think that's an important question that people, want answer for, right? Initially, maybe it's a good thing to go for debt, Sanjay, if you believe in it.
Yeah.
What's your
so
thought
if banks are providing, see, the people come to investors for private investors for two reasons, right? One is for the value, what they're offering, and also the long-term belief in the high capital. If banks are providing, banks don't provide a huge amount like what an angel investors do. And bank also asks for collateral and some other security and all, right? So in that case, if you have the security banks are providing, it's always a good option because you don't dilute any equity and you just pay in a small interest rate. And you can, once your company is growing, then you can come to an angel investors or institutions to raise an extra round.
Great. So that's one thing. And there's one more question I think I'll just leave. So there's a whole lot of people, it's the flavor of the season, e-learning startups, right? What do you think about that, Sanjay? What's your take on that?
Yeah, so I know everyone is online and everyone was subscribing for e-learning. I've seen parents are searching for more and more platforms to subscribe to engage their kids at home, right? It has an opportunity, but provided what are you offering, right? Today, the tons of online edutech platforms are mushroom overnight and still happening. But still the market exists. I won't say, though it's crowded, still it has a market. But what is your offering? What is the core value proposition, and what kind of content are you doing? Are you doing like an academy model, or are you doing a platform model, or you're doing especially like White Hat Junior only technical stuff? What is that? Is it vertical or horizontal? You need to be defined. And before starting up, you need to do your homework well, research whether still where the opportunity is there. Like it's already, this is going to get into a red ocean. Yeah. So you need to see like, is it still in the blue ocean? Then you need to think and get over there.
Sure. So with that, I think Sanjay and Taran, we can end the session. And thanks a lot for the audience who came in and were part of the session. And Taran, we wish you all the best for your startup, and wish to see and hear more of the events as we go ahead. And Sanjay, and we wish to hear more from you on your Gyan on startups and
sure, Bala.
More.
Bala, before that, maybe you should post Neiman's link also to all the participants. Maybe Taran, you should share the link with all the participants. Because I highly recommend, not because of marketing. I'm one of the customer and very highly satisfied with the quality of the shoes. Trust me, this quality you may not get in certain brands. You may get in the super premium brands, but this price you won't get it. Maybe Taran, you should. It's an opportunity for you to post without Neiman's link so that participants will also get to know about that.
Yeah,
absolutely. Thank you so much, Sanjay. Appreciate it. Thank you for bringing this up, right? So you can buy our products from www.neemans.com. It's NEEMANS.com. So I'm trying to see where should I post. Okay.
I've just posted on the chat. So
okay, awesome.
So 1 second, I just have to post it to attendees as well. Sorry. Yes. Here you go. So you can check out the Neiman's shoes and probably buy one of the favorite merino wool colors that you would like, and enjoy the comfort of Neiman's shoes. And I'll definitely go in for one, Taran. So if you're delivering in Chennai in my pin code, you can look out for an order from me. And
cool.
Hope to catch up with you soon. And great. And wish you all the best once again. And Sanjay, sorry, I'll give you to talk. Give you
sure.
Sorry, Taran, go ahead. You want
to
say?
Go for it. Thank you so much. Thank you, Bala. Thanks, Sanjay, for having me here. It was a pleasure connecting with the both of you. And we'll definitely connect more offline.
Sure. Thank you. So Sanjay, we'll look forward to more sessions from you. And this is exciting about this one-on-one. So, I mean, there are many people already wanting to reach out to you and talk specifically on aspects related to their startups. So what they can expect in the one-on-one session, how they can deep dive, they can come and with all their doubts and queries, they can talk to you. What do you say? How we can configure the one-on-one session to make it more interesting?
See, this all what I'm going to talk, it's all with my experience with 30 plus portfolio companies, where I'm personally sitting on board of 6 companies in the early stage. And till date, I reviewed more than like 6,000 plus business plans, and still I continue doing that. My fair understanding about any startup on the common mistakes they make initially, and especially when it comes to raising funds, they need to be really prepared. Maybe those kind of aspects I can touch upon, and I can give them some more insights and how they need to be prepared and what kind of investors they need to look in, and maybe some companies which are good and suits our investment thesis. We may also look at them, which suits that. But overall, they can expect most on the a little more emphasis on the fundraising, go-to-market, product evaluation is what I can look at.
Thank you, Sanjay. So you guys, when you are, in case you're going ahead and applying for Sanjay's one-on-one session, have things clear. First, maybe 5 minutes, talk to him about your startup and what are the specific problems you want or, advice you want from Sanjay, and then take it through an open house discussion on the next 50 minutes on what all you can do. I'm sure it's going to be a huge value add for you with all the wealth of experience that Sanjay comes in. So great, guys. Thank you once again. Thank you, Sanjay. We'll see you soon in the next session. Good evening.
Thanks, Bala.
Have a great
evening. Thank you.
Yeah.
Thank you.
Thank you, Tanzila.
Thank you, Tanzila.
Yeah, thanks.